right. So what is Forex trading? So Forex trading involves exchanging of currencies, trading currencies, buying and selling currencies at a determined price. And when it comes to Forex, the world of Forex, you choose a pair. So basically over here I have sterling pounds against Japanese yen. So in this I am trading sterling pounds against Japanese yen. So basically I am buying sterling pounds against Japanese yen. So for example, say this, right? So over here GBP against JPY. So GBP. So if I were to buy this, so over here you see that so you see that there has been appreciation. So this appreciation, so from the price of 131 to 140, this indicates that sterling pound has gained strength over the Japanese yen. So this happened on the 29th of June 2020 all the way until September. So over here, sterling pound is buying more Japanese yen. So yeah, you might be familiar with that, but so yeah, that's the plan here. So what are all these stuff, right? All this example is, so over here, this, the price has rejected at this point. So green candles are called bullish candles, red candles are called bearish candles. So at this point, you see a lot of candles rejecting. They come up, they come down, they come up, they come down, they come up, they come down. So if we were to put a line here, horizontal line, so this, we'll call it as resistance. This will be resistance. All right, this is resistance. So every time price comes up to this level, we can expect a rejection. So this will be evident. This is over 20th August, and then we come back to June 2020. We got rejected. We come back all the way here. See over here. So previous resistance can be turned as support also. So this resistance over here is now a support here. Support is where price gets pushed up. This is also called a liquidity area. A liquidity area is where price comes down, and then all the banks and investors, they buy at this point. They buy at this price because it's a very reasonable price to buy sterling pounds against Japanese yen. So the price gets pushed up all the way up again. So this is a strong support during the 1st of November 2019. But now, as you see, let me make it shorter. Okay, the previous support now turned resistance. Price came all the way below this. It came up again here. So over here, this support now becomes resistance. So yeah, so support, a lot of traders, they buy at this point, like they blindly buy, thinking, okay, since it's at a support, what are the odds that price is going to break down, or what are the odds that price is going to go up? The probability. So obviously there's a higher probability because it's a daily time frame. So over here is a daily time frame. It's a combination of 24 hours. So one candle, this whole candle, it represents 24 hours. And then we go back, and now the resistance, right? We go all the way back. So see, even over here, we can see that this candle came down here, got rejected, got pushed up all the way up. So this candle came down here, and this is around 200 pips. 200 pips on a standard lot is around $2,000. So yeah, get pushed all the way back. And yep, so then we have the time frame. So this is a daily time frame. I usually trade on the 30-minute time frame. The 30-minute time frame is this. So for example, now let me draw my support and resistance. So like I said earlier, you can see price rejecting this area, this price. But then I will draw my resistance here. All right, resistance is now drawn. Now you see that price has rejected at this point. Every time price comes back here, gets pushed up, comes back here, gets pushed up. So then over here, I draw my support, right? So what did I say earlier? That previous resistance or previous support can now be, previous support can now be turned as resistance. If price broke This was the support. Price broke below support, and then it came up now. So this is now resistance. So as you see, price got rejected over here. So this Japanese candlestick, the bullish candlestick, it closed a weak bullish candle, right? So this came down, got rejected, and now, like I said, over here, if you were to represent this from here, right? So you will draw this candle, draw this text box, and this is now the recent support. So every time price comes up here, investors and retail bankers, they see, oh wow, 137 is a very good price to buy, so I'll buy at 137. So a lot of money coming up in 137, and it grabs liquidity over here. Yep, price gets pushed up all the way back. So yes, and this is like the basics. So first you need to draw your support resistance very carefully, because based on support and resistance is where you map out your trade, where you plan, where you hunt for your trade. So over here, like for example, I mapped it out. So I could have placed the trade right here, a long position at this point, and place stop here, and then place this thing here, and then at this point it takes me around 4 hours for me to hit my take profit. Yeah, around 4 hours. But yeah, we'll come back to this later. But now we have to learn how to draw our support and resistance, right? So now, okay, we come back, right? Let's remove everything. We'll start fresh. So first, you go to the daily. Daily is very important. So you reset chart and you go to the daily, right? And in the daily, take this horizontal line and you see where is the recent support, recent resistance. So over here, I placed the bar here, the resistance bar, because the price got rejected. It's getting rejected again, right? The next resistance is somewhere at this level. See, got rejected. So right over here, right? Got rejected right over here. Then the next one is somewhere here, and there's another rejection somewhere here. So these white lines represent the 24-hour candle. Okay, and now this is the resistance. Okay, this is the resistance, and now we place the support. So see, this is the recent support. Placing it right here, right? See, now it's in a huge range. Resistance, support. So where is the next support? Where do you see price accumulating? Right over here, right? So you place another support right here. Okay. So over here, when you go left, you see this representing something else. So this support now represents resistance. Why? Because see, this candle tried to come up but couldn't. It got rejected. Just keep in mind that when price gets rejected at a certain point while going up, it's at resistance. When price gets supported, when this price is coming in, it gets supported. This is a cushion. It pushes this price up, then it's a support. So that's how you identify zones. And now we've identified all major zones at this point, and then we move to the 4 hour. This is the 4 hour time frame. It indicates 4 hours in one candle. So one candle indicates 4 hours. Now you see our daily analysis. What we did in the daily, the 24-hour candle. Now this is resistance, right? So you bring it close. Now you clean this mess up. You bring it a little bit here. Now you see this has got rejected. This has got rejected. So now you properly place these lines, right? Now you keep it here. So now this is perfect. So now looking left, right? Okay, now this one is right here. So what's the recent resistance? You bring it down all the way here. So you see these guys have got rejected. And these guys just minor rejection because they can represent this. So now the price is now trading at this whole range. This is a massive range around 200 pips, right? So at this point, my analysis would be, right, if price breaks above this, if price closes above this white line, we can expect price to fill this up to here, around 66 pips. Why? Because when you look left, there's clean candle. You always look left for cues. So when you look left for Qs, you see that price has come all the way up here. So previous on 10th of September 2020. So over here today, 22nd October, if price comes up here and breaks and closes above this white candle, white horizontal line, we can anticipate price to the next 4-hour candle to touch 138. So that is the plan. But in the event that price breaks below this, we can see that the next recent support is somewhere here, right? Somewhere here, next recent support. So then if price closes below this, we can anticipate price to come all the way back here. And if it closes below this, then looking left, you look left, where is the next junction, right? You see the price is coming all the way back here. It's getting supported here. So every time it breaks the support, price will look left and it will see, okay, where is the next support? Where do I go next? The price comes all the way back here. So that's what happens. And then you go to the 1 hour. You go to the 1 hour, and in the 1 hour, you see that, see our 4 hour is now correlated with the 1 hour. Price comes up here, gets rejected. So now the 1 hour, like this. Now you zoom in to see the candles. You need to learn how to read the candles, right? So now, when you zoom in, you will have to note down that there are mini supports created. So over here, like I said, support is a place where it pushes price up. See, price came down here, got pushed up. And the support here as well. See, price came down here, got pushed up. So you need to draw this. You need to practice this every time. Then you'll get your supports right. Then when you get your supports right, you will make your analysis even better, and you will take perfect, precise trades, right? So yeah. So at this point, now this current price, okay, it's at 137,227. So this can come all the way here, but also if you properly allocate this like this, right? See, this wick is touching this is touching this. So there is a rejection. Now who rejects trust? Resistance reject prices. So over here there's rejection formed and over price is trading over this, right? So now if this price closes above this, like if you see a candle forming up to here until here, you can take the trade all the way up to here. This is the next area. Right? So then you have a higher probability, like you have a higher range, a bigger range. See the amount you can trade over here. Whereas over here it's a very small range, like this is around 15, yeah, it's around 16 pips. Whereas over here it's around 30 pips. And if price breaks below this, then you trade here. Then you anticipate, you predict price to come down here. So it's all about speculation. But obviously things can get a little bit confusing. But there are certain things which I look for. For example, in today's trade, I took it right over here. Yeah. So today's trade, what I did was now, yeah, when I came to the chart, now it is there, right? So I looked at this. The price came down during London Open. Price got rejected here, came down. Price came down here, came all the way here, and then over here. Now I look left, right? Now I look left. Now I look at left and see, okay, see, this was resistance before, now it has turned support. So I know for a fact that price is going to get supported here. It's going to get pushed up, right? Then what I did was I waited for a 15 minute to close, right? A 15 candle to close, and I took the trade up. So my trades were somewhere here. Trades are here. I got around 16 pips today. So yeah. So your stop loss is important. A stop loss is not a stop loss. A stop loss protects your trade from going beyond your risk exposure. For example, if your risk exposure is $150, $200, a stop loss gets that. Like it protects your capital. Basically, it protects your capital. It doesn't allow the move. For example, okay, now let's say I took the trade here. I took a long. Long means buys, right? I took the buys here. Okay, now price. Now, when price came up here, I did not close my positions. I wanted more, but price turned negative. It kept on going down, right? It kept on going down. So this arrow indicates that my stop loss has got hit. So my stops were around $200. Okay, so if I didn't stop loss, price would have come even lower. So I would have lost $300, $340, $400 here. So basically, a stop loss, it protects your capital. It protects your capital. For example, news. Okay, so let's go to gold. So look at gold, right? So this, remove everything here, remove line. So yeah, so over here, right? Let's say you were a person buying gold at this point. Okay, the gold price is now trading at 1927. So you're anticipating gold to go all the way to 1940. Okay, so the line here around 1936. Now what happened was price was trading here, price went up here, you did not secure profits, right? But suddenly Donald Trump, he tweeted something, then price just goes all the way down, like it just crashes down like a waterfall, goes all the way down. So at this point you are in a 78 pip drawdown. 78 pip on a standard lot account, we'll come to that, but a 78 pip on a standard lot account is $800. $800 with commission. So by placing a stop, you are protecting your account. Your loss is cut off at 78 pip, right? You get that point? So let's say, right now, in case you're buying here, you haven't placed a stop, no stop. So you would have lost. Look at this, right? You would have lost you bought over here. Price kept on falling. So you would have actually blown your account. You would have lost all your money over here. So it's important to have a stop loss, but yeah, it's a game of probabilities. End of the day, it's a game of probabilities, and you have to make sure that whatever probability you have towards you can capitalize on that probability. For example, this was a very high probability trade, and you wanted to get more. Yeah. So at this point, right? For example, this was a high probability trade, because what are the factors I took in mind? I took this into consideration. I took this back. See, this was a previous resistance. Price got rejected. So what are the odds that the price gets supported at this point, right? It gets supported. There's a cushion here. There's a place where investors are waiting. This price is very attractive. So investors come into action at this point, and they push price up, they buy it up. Then this had like an 80-90% probability that I was going to win it end of the day, and I won it. And I did. I secured at this point, and yeah. So at that point, I called it a day. So yes, that's about it. So you just need to learn how to place your support resistance, because based on support resistance is where you map out your trade. There's technical analysis. It's all technical, meaning how to read candles. Fundamentals are like news, like Brexit news. I'm trading British pound, Japanese yen, so I know that British news, Brexit news, anything to do with the MP Parliament will push price up or down. So in case of high unemployment figures, we can expect the pound to plunge. So yeah, so over here we had Brexit news. So any Brexit news is good news for the pound. So pound just appreciates against the yen. So yes, so this is just a small introduction to what I do. And if you are interested, I can give you the other videos as well into like price action and other fundamental and technical aspects of Forex trading. I hope you enjoyed this video.